Asia markets shrug off Wall Street's sell-off after Fed Chair Powell warns trade tensions may hinder inflation control and growth. Trade tensions surge as cancelled Chinese shipments and rising tariffs reshape global supply chains. And is Britain's $3 billion steel rescue a plan to green industry or just delaying the inevitable? Hello, I'm Taiba Aiden with the latest business and finance news here on TRT World. Asian markets mostly rose on Thursday following Wall Street's sharp decline after US Federal Reserve Chair Jerome Powell warned that the ongoing trade tensions could challenge the central bank's goals of controlling inflation and spurring growth. Hong Kong tech giants led gains with the Hang Seng Tech Index up around 2% despite a sell-off on Wall Street. Gold prices hovered near an all-time high after hitting a new record of $3,357 an ounce earlier in the session, driven by demand for safe haven assets amid escalating trade tensions. Meanwhile, the US dollar index recovered some losses as investors continued to assess the Fed's outlook in light of shifting trade policies. For more on this, we're joined by Farah Murad in Dubai, Senior Market Analyst at Equity Group. Thanks for being with us, Farah. Now, tech stocks in Asia have shrugged off those declines on Wall Street. So what's lifting confidence there?
Thank you, Taiba, for having me. What we're seeing now is a tactical rebound, driven mainly by bargain hunting, I would say. Traders are buying the dip, but long-term investors as well probably repositioning right now, especially in AI semiconductor names ahead of the US earnings season. So we are expecting this rebound, especially after the huge sell-off we saw yesterday. Some investors as well are expecting a pivot point from the Fed despite the latest signals that we're hearing, which is highlighting the fact that probably the Fed is not going to come to rescue the market, especially if this shock is driven by policies, tariffs. So that's something that we need to take into consideration. And this is why we're considering this bounce to be at least on a short-term scale, not a start of a trend until at least seeing more signals in the market.
Right, and the Fed has said, as you mentioned, that it's in no rush to cut rates at this point, and it's warned continuously against Trump's tariffs. So what would be the best and worst case scenarios for investors?
The best case scenario definitely would be, I would say, de-escalation of what we're hearing right now, a possible way that usually Trump starts a negotiation with the most aggressive scenario, just in order to sit and negotiate. So that's definitely something that the market are anticipating. And this is why, by the way, last week we saw this rebound just after the news of 90 days pause on the tariffs. The worst case scenario definitely would be a bigger shock to the market, higher tariffs, the Fed not interfering to support the market. That's inflation, as well as lower growth, and that definitely would be the worst case scenario for the market.
And in light of this escalation, we are seeing gold prices surge to new record highs almost every day. Were you expecting such levels of gold prices to soar?
I mean, it's definitely above expectation, but it's logical. The gold is not acting just as a classic safe haven. There's deeper concerns, long-term inflation, even banks demand. Banks somehow are hedging against their own policies, the dovish policy that they might be moving towards in the next couple of years. So it is probably stretched, yes, but it's still logical. I believe gold prices are supported, and there's definitely too many signs that we might see even higher prices. Let's say, for example, the ratio of gold compared to the liquidity circulation, the currency circulation. In that, I would say, sign alone, gold can even peak towards $5,000 and $7,000 per ounce and still be logical. So yes, it is stretched. We're seeing signals of overbought situation on some technical signal, but it is still logical and the trend is supported.
Right, Farah Murad, we will have to leave it there. Thank you very much for being with us.
Thank you for having me.
Now, from shipping ports to luxury malls, the trade war is reshaping the way the world does business. Beneath the headlines are disrupted routes, rising rates, and a new scramble for influence in Southeast Asia. The economic impact of each cancelled ship or policy tweak is no longer theoretical. It's measurable, visible, and immediate. 80 freight sailings from China have been cancelled, impacting up to 800,000 containers in volume. This is a direct result of US tariffs triggering order pullbacks and demand uncertainty. Each missed ship affects crane operations, trucking, rail and warehouse storage. The ripple effects from lower container volumes could cost ports and logistics firms millions in lost fees. Freight rates on routes from Ho Chi Minh to Los Angeles have surged 24% in early April, with mid-low pricing jumping 43%. Vietnam is rapidly becoming the go-to for US importers avoiding tariffs. And China is now targeting legal, consulting, education and aviation services. Up to $24 billion in US service exports could be affected, including a $32 billion surplus in 2024 now at risk. For more, we're joined by Andy Mock, Senior Research Fellow at the Center for China and Globalization. Good to have you with us, Andy. Now, what does this drop in Chinese freight bookings reveal about global trade confidence?
Well, I think what it indicates, not just about confidence, but just how tightly interlinked the global trading system is, and the widespread and sometimes unexpected collateral damage from these tariffs. So what this drop shows, as we just heard, is that this will disrupt port operations, logistics, particularly in the United States as well. So I think that we should brace ourselves for increasing domestic political fallout in the United States as prices rise for consumers, as we may see shortages of goods, other knock-on effects that might not have been anticipated when the Trump administration launched this tariff onslaught.
Right, and as we had, this not only impacts exporters, but also a wide range of workers from port to warehouse storages. But President Xi's recent visit to Cambodia, Vietnam and Malaysia could be painting a completely different picture. What's your take on that?
Well, I think we're certainly witnessing a split screen moment here where the United States, whatever its intentions might be, I think is largely seen around the world as disrupting and even destroying the existing global order that, while it has some defects, has worked largely pretty well for most of the world, including the United States. Meanwhile, on the other side of the split screen, China is widely seen as a builder, literally of bridges through the Belt and Road Initiative, of institutions like the Asia Infrastructure Investment Bank, its participation in BRICS, et cetera, and very importantly, as a builder of technology ecosystems like electric vehicles, from advanced batteries to the manufacturing of electric vehicles, and to the emerging so-called low-altitude economy, where through the use of technology, drones, et cetera, that we will see perhaps an entirely new growth sector emerge globally over the next few years. So I think as we look at this split screen moment, countries, especially in Southeast Asia that President Xi is currently visiting, Vietnam, Malaysia, and Cambodia, see this split screen vision, and I think largely looking for a country that provides stability and predictability and is building a better future for all of mankind.
And we are now looking at China targeting US services, not just products. So do you think this shift is more symbolic or is it an economic strategy?
Well, I think it's both. So what China has done is it has taken very measured calibrated responses against the tariffs to not escalate. But at the same time, I think it is showing both symbolically and in substance its strong stance against what it is calling unilateral economic bullying. And these asymmetric measures include looking at the services surplus from the United States, managing the value of the RMB, other asymmetric measures such as accelerating the adoption of the digital yuan as an alternative to the dollar and as a payment system that is an alternative to SWIFT. And I think it's important to point out here that from a technological cost perspective, this alternative is more than 90% cheaper than existing alternatives and can be settled in seconds instead of days. So I think what we are seeing here is China's openness to a respectful, mutually beneficial relationship with the United States, but at the same time, demonstrating that it has both the will as well as the toolkit to fight back very effectively against these tariff attacks by the United States.
Right. Professor Andy Mark from the Center for China and Globalization, thank you very much for your insights.
Thank you for having me.
Now a quick look at some of the other top business stories from around the world. Chip maker TSMC's profits rose 60% in the first quarter as demand for AI chips stayed strong. But new trade rules from US President Donald Trump could make things a lot harder. Taiwan now faces a 10% tax to sell chips to the US, and that could rise to over 30% if no deal is made. Netflix is set to report first quarter earnings on Thursday, and an 8% change in the share price is expected to follow. The streaming giant is considered a safe option for investors as it performs better in times of market chaos. Its share price has increased 9% so far this year, while major tech companies like Apple, Amazon and Alphabet have declined by 20%. Japan has reported a trade deficit for the fourth consecutive year, falling to $37 billion. But it saw a surplus with its second largest export partner, the US, reaching $63 billion. This comes as President Donald Trump and Japanese officials meet in Washington to address potential 24% tariffs on Japanese goods. And OpenAI is in talks to acquire Windsurf, an AI coding startup, in a deal valued at around $3 billion. Windsurf, formerly known as Codium, builds tools that turn natural language into code. The potential deal comes as OpenAI looks to strengthen its position in the fast-growing generative AI market. Now it's a critical moment for British industry. The UK's last major steelmaking plant has been thrown a lifeline, but for how long? The government has stepped in with emergency powers to keep British Steel's Scunthorpe site alive. But how? Tulay Kalyon Haznederol tells us.
Britain's steelmaking site, the British Steel plant in Scunthorpe, was set to shut down by May. But the government stepped in, passing emergency legislation to seize control of operation, saving the furnaces and the country's last blast-based steel production for now.
That a message has been received from the Lords as follows. The Lords agree to the Steel Industry Special Measures Bill without amendment. Yeah. I must report to the House that His Majesty the King has signified his royal assent to the following Act under the Royal Assent Act 1967, Steel Industry Special Measures Act 2025.
The collapse of British Steel raises concerns across the industry and in Westminster. British Steel's Scunthorpe plant has been owned by Chinese firm Xinye since 2020 and is reportedly losing around $926,000 a day. It remains the UK's primary steelmaking facility, employing 3,500 people. And funding to keep the site operational will come from the government's $3.3 billion Steel Transition Fund.
I do worry. I worry about the future of Scunthorpe if this goes down. What's where are people going to get jobs?
I think it needs to be kept. It needs to be, things need to be done because it is a valued part of not just this place but the whole of the UK and the world.
Because once the blast furnaces close down, it's hard to get back up again. So, yeah, I think it was a good thing to happen.
But to Britain, this is more than industrial strategy. It's also about economic and national security. So now the question is, can Britain protect a loss-making plant into a profitable green steel powerhouse? Or is this just a costly delay of the inevitable? Tülay Kalyon, Haznederoğlu, TRT World, London.
Joining us now for more from London is Vicky Price, board member at the Centre for Economics and Business Research. Now, Vicky, this is one of Britain's last standing furnaces. How sustainable is the government's $3 billion bailout of British Steel, do you think?
Well, the interesting thing is that the government had already announced it was going to have that fund available, particularly for modernising the steel industry, which needs actually to move into more sort of electric power. And that, rather than having blast furnaces, but that's going to take a little bit of time. It's already happening in another part of the UK, in Port Talbot, which was owned by Tata Steel, where there's been a closure, but there is a conversion to electric arc furnaces. So there is a big change happening. Now, the question is, if all that money for the time being goes to supporting what we've got at present, which is a loss-making company that needs to be having this injection of funds for a period of time to continue to operate, then that is going to obviously drain away quite a lot of those resources. So I am suspecting that unless a buyer is found quickly from somewhere, that these costs are going to mount up.
Right, and can this loss-making plant really be transformed into a profitable green steel producer?
Well, there is a big argument here in the UK that one of the reasons why the plant has been in trouble and why generally industry has not done as well as perhaps would have been the case otherwise is because for energy-intensive sectors, the cost of electricity is very high, and that compares, of course, very unfavorably with other countries in the EU, where for industry the cost of energy is something like 50% higher on average and hugely higher than in the US. And if something can be done to amend this, and that goes across actually the manufacturing sector in the UK, then you could look at possibility of making this plant actually at least have fewer losses, but also possibly become profitable at some stage. I think that is the hope, but I think it seems to me that, like with very many other privatized industries, which is what the UK had been doing over a period of a few decades, from nationalisation back to privatisation, what we have found is that, in fact, the state has continued to have to subsidise quite heavily, either by guaranteeing prices at the end of the day of whatever is produced, like in the offshore wind sector, for example, or by continuing to subsidise, as has been the case in railways. So I'm afraid we're in the same pattern, probably with steel as well, which is considered to be a very strategic sector.
Right, Vicky Price, we will have to leave it there. Thank you very much for being with us.
Thank you.
Now, European countries are bracing for challenging times ahead of US President Donald Trump's decision to delay increasing tariffs for 90 days. This development coincides with this year's 4th Antalya Diplomacy Forum, where many experts discussed the best way forward for the region. Emre Boz was there and sent us this report.
The production lines of European firms are working as usual. But the shadow of US President Donald Trump's decision to impose tariffs on the EU and other European countries still looms large. For now, the EU has announced it will delay its own 25% retaliatory tariffs on the US for 90 days.
And that's what makes events like this at the Antalya Diplomacy Forum more important than ever, with its theme reclaiming diplomacy in uncertain times. Many businessmen and ministers from all over the world gathered here in Antalya to discuss how diplomacy can better improve economic ties and regional cooperation. And for many European countries, the best way moving forward is to enhance and strengthen economic ties rather than cut them off.
National governments may take some protectionist measures. It may, let's say, help temporarily, but at the end, the history of the humankind clearly shows, and the history of the economic development shows that the less barriers to trade are better chances for development. One of the main topics discussed here is about economy, about how to further, to strengthen, enhance the economic cooperation in Europe and beyond.
If the US follows through on its tariff decision, it could create a ripple effect throughout Europe. Domestic consumption in the bloc may decline as consumers become more cautious about spending. And in global markets, European goods will become far less competitive. The US takes the lion's share of EU exports at just over 20%, followed by the United Kingdom and China. In terms of imports, the United States is second at 13.7%, just behind China. EU officials have expressed their willingness to negotiate with the US. They want a zero-for-zero agreement, which would eliminate tariffs on both sides. But with Donald Trump showing no signs of changing his mind, the economic outlook for many European countries may become increasingly uncertain in the next few months. Emre Boz, TRT World.
Irregular border crossings into the EU dropped by more than 30% in the first quarter of this year, hitting their lowest level since 2021. The bloc has been struggling for years to come up with a collective solution for new undocumented arrivals. Shadia Edwards-Dashti reports.
Illegal crossings at Europe's borders are down, hailed a win by all those long calling for tighter asylum rules. Election after election across the EU has recently seen manifestos focusing on curbing the numbers, pledges that swung votes.
As for migration, we will pursue a new approach. We will end illegal migration. There will be border checks and rejections of asylum requests.
According to Frontex, irregular migration has dropped by more than 30%, a difference of nearly 34,000 people in the first quarter of this year, compared to the same period in 2024. In a bid to speed up returns, the EU has published a list of so-called safe countries to send people back, including Kosovo, Bangladesh, Colombia, Egypt, India, Morocco and Tunisia. The plan, a long time in the making, will make it harder for people from these countries to claim asylum in the bloc.
The EU list of safe countries of origin is a dynamic list. That means it can be expanded or reviewed over time. Countries can also be suspended from or removed from the list.
Italy is pursuing offshore options. Authorities recently transferred 40 people without permission to remain in the country to Italian-run migration detention centres in Albania. Meanwhile, Spain is focusing on rooting out irregular immigration networks. This week, 4 individuals were arrested on charges of belonging to a criminal organisation illegally smuggling around 50 people into Spain.
They managed to carry out up to 50 transfers via vans and trucks to Spain in 2 years. Each person was charged up to $3,400.
A common route is across the Mediterranean Sea. The perilous journey has seen many people die. Despite the dangers, thousands still take the risk. Rights activists say that's an indication of how desperate they are to escape where they have come from. Human rights lawyers have called for safe and legal passages as the bloc clamps down. Shadia Edwards-Dashti, TRT World.
More than 10 years of war has left once lively Syrian towns in ruins. As the fighting fades and the regime falls, people are slowly trying to rebuild their lives. But with little help, both locals and officials are struggling to bring back what was lost. Noor Kormush has more from Syria's western province of Hama.
After years of displacement, Abdul Nasser, an attorney, returned to his hometown, only to find it in ruins. Now serving as the head of the civil council, he says widespread destruction continues to stand in the way of meaningful recovery.
The entire infrastructure in the Hama countryside is either destroyed or damaged beyond use. There are no electricity cables, no water systems, no bakeries. The regime tried to impose collective punishment on the people when its forces took over the city in 2019. After the liberation, when people returned, they found all of their homes destroyed.
Officials estimate that more than 90% of the rural infrastructure was either damaged or destroyed. Restoration work is slowly progressing. Efforts to bring back electricity began earlier this year. Water, once available for a few hours a week, now runs more frequently in some areas.
We used to suffer greatly due to the lack of water and electricity. Now, after the recent work, things have started to improve. Some people are getting water, while others still aren't. We see the efforts being made, and we hope the situation keeps getting better.
The government says it is committed to restoring services across the province, but admits challenges are significant.
After the fall of the Assad regime, we began reviewing the infrastructure records. We discovered widespread administrative corruption and a total lack of proper resource management. Several international NGOs expressed a desire to help significantly, but their involvement remains limited due to the international sanctions.
For the people, every fixed road and restored utility is more than just a service. It's a sign of survival and quiet resistance to the devastation of war. Despite immense challenges, the new Syrian government says it is doing everything possible to bring back basic necessities. But years of devastation continue to hinder those efforts and have further worsened the economic crisis. Officials say they know the institutions are struggling, budgets depleted, and the scars of war run deep. The situation will get better in time as people await the promise of the new Syria. The Commercial World, Hama, Syria.
Well, that's all your business news for now. Thanks for watching.